So, hi everyone. Thanks for taking your time out from your busy schedule at Altport Experts. We are thrilled to announce our brand new show, which is Ask the Expert Show. Through webinars, we aim to share insights into diverse asset classes, forecasting knowledge amongst our investor community. So, my name is Devanshu Bindish. I am the Vice President of Altport Experts. With me, I have speaker Mr. Akshay Davra, Fund Manager at StepTrade Capital. Let me take a moment and introduce Mr. Akshay Kabra. Akshay Dabra. So Akshay Dabra is seasoned financial professional with a strong background in investment management across private and public markets. As a CA, he brings a wealth of expertise to his role as fund manager at StepTrade Capital. Akshay, prior to this, his experience includes serving as fund manager at MK Capital, where he worked on setting up family office and setting and up Category 1 AIF, wherein he evaluated and deployed capital across infrastructure, metals, and FMGCG sectors. So, welcome, Akshay ji.
Thank you,
How are you?
Devanshu. Very well. I think thank you for the, brief introduction about me.
Yeah.
Yeah, we can take it up.
Yeah, so Akshiji, if you can introduce yourself and give little lights there on the strategy, how do you do, what do you do, and how you make money for our investors into
Sure,
SME space, that would be a great help.
sure. Let me start with a brief introduction about myself. Akshay Davra. I'm a chartered accountant by profession, and I have had a taste of financial markets for almost a decade now. I have been, managing, seeing the movements in the capital markets, listed markets primarily. Then I began my career on the investment banking sales side. Eventually moved to the buy side, wherein I led a SME fund. Yeah. So herein, what I see and going forward that we are coming up with, I'll be presenting that with you. Just give me a second. So, yeah, talking about the macro dynamics as of now, India being one of the top 10 GDP economies is set to grow at the highest pace right now among the all the top 10 GDP economies that we have. The second is obviously China, but having other dynamic shifts like the global supply chain shifts that is happening right now. So everyone is considering China plus one strategy and diversifying their supply chains, their risk of supply chains, and moving to India as a as a alternative. So India as a domestic manufacturing hub, as well as a hub where the export of not just the products but the services is going to unfold in the next decade. That is where we see the most growth happening. So how as a fund house we plan to channelize that growth, capture the valuation upside in that growth, and make returns to our investors. That is, I'll be, talking about today in our presentation. So, yeah, how do we position ourselves in this market? So we as a fund, Chanakya Opportunity 2 as a fund is primarily focused taking exposure into the private markets. Private market में exposure लेना, but at the same time we are not venture capitalists or angels जो initial stage पर आते हैं. We are not those people who are investing in companies that are in the ideation stage, that are yet to find their product market fits. No, we are not there. Where we enter is we enter into the companies जहाँ पर promoter, the founders have already executed their idea. They have found their markets. They have predictable cash flows, revenue to begin with, and they have done that execution profitably. So when we enter with the companies, they are profitable on the day one. At the same time, the founder has the vision. He plans to get its IPO within next 3 to 4 years at max. So where we enter into the private market late stage growth stage where the company is looking for growth capital, वो हमारे से capital लेने वाला है in exchange of equity or उस कैपिटल को डिप्लॉय करके एग्रेसिवली ग्रो करने वाला है. वी आर नॉट एक्सचेंजिंग हैंड्स विद इन्वेस्टर. सेकेंडरी मार्केट में वी डोंट इन्वेस्ट. वी इन्वेस्ट प्राइमरी, गिविंग द फंड्स डायरेक्टली टू द प्रमोटर. वो बिजनेस में लगाएगा, he'll carve out the returns out of that and give us an exit into the listed market post 2 3 years down the line, where he's planning to get us an exit. So in this macro setup and this stage of the company life cycle, where the revenue is increasing and the risk of failure is decreasing, and the valuation upside is yet to unlock through the medium of IPO, that is where we enter. And यहाँ पर हम वैल्यू क्रिएट कैसे करते हैं? हम वैल्यू क्रिएट ऐसे करते हैं, प्रॉफिटेबल कंपनी में प्राइवेट मार्केट में प्री आईपीओ इन्वेस्टमेंट कर रहे हैं हम, वेयर इन the investment round is happening at a much discounted valuation as compared to the listed market. Why? There are a number of reasons. Liquidity नहीं होती, private markets में governance maturity अभी नहीं है to get this into listed. So the company is at that stage. So we take discounted valuations here, and we as a fund house, we position ourselves offering multiple solutions to the founder. He needs to get his private funding done. वो private funding अपनी करवाने आ रहा है. We not just our own check. We are happy to join us, co-investors with us who write checks with us into the round. So private round pura he is well taken care of. Post private funding, when he looks to get its company go for IPO, the SEBI communication part, DRHP filing part, we have our own independent merchant banking arm as well. That is well taken care of. Post listing support, there are a number of activities that need to be done, market making and all. So as one fund house giving all the solutions to the promoter under one roof, that gives us the edge to command very negotiable terms where we enter as an investor. So we take exposure बहुत discounted valuations पे into the private markets. Then we sit through the journey till IPO, and this IPO the valuation unlocks. P expansion होता है यहाँ पर, valuation unlock होती है just because the company got liquidity, a liquidity event. Post that, पोस्ट लिस्टिंग 1 क्वार्टर 2 क्वार्टर के बाद जो कंपनी, जो ग्रोथ स्टोरी हमने फंड करी थी एट द फर्स्ट प्लेस, व्हेन दैट ग्रोथ स्टोरी स्टार्ट्स टू अनफोल्ड एंड वो अर्निंग्स में दिखनी शुरू होती है, अर्निंग्स कॉल में द प्रमोटर डिक्लेयर्स द काइंड ऑफ ग्रोथ दैट वी बेट अपॉन, वो जब होने लगती है, देन दैट इज व्हेन वी टेक एग्जिट इनटू द लिस्टेड मार्केट. So this is the broad value creation playbook that we have, and this is not something which we see जहाँ value बनेगी. ये historically proven है. So if you'll take the data of last 5 years, ऐसी companies ऐसी कंपनीज जिन्होंने लिस्ट होने की डेट से 24 months बैक, 2 साल पहले कोई भी प्री आईपीओ राउंड लिया जहां पर दे गॉट द फंडिंग इन द प्राइवेट मार्केट्स, एंड फंडिंग के 24 months के अंदर अंदर दे गॉट देयर आईपीओ, एंड 6 months आफ्टर दैट व्हाट इज द वैल्यूएशन at that point of time versus the valuation जहां पर एंट्री करी थी in the private round. So that is the valuation upside these numbers are capturing in 273% plus in all the years, and these are CAGR returns, and this has historically happened, and this includes your SMEO, main board, both the IPOs. So this is the stage, this is the phase of the company जहाँ वो प्रॉफिटेबल होने के बाद प्राइवेट मार्केट से पब्लिक मार्केट में ट्रांजिशन करती है, वहां पर वैल्यू अनलॉक होकर कैसे दिखती है. दिस इज व्हाट इज हैपनिंग इन द इंडियन मार्केट्स. And as a fund house, how we are, preparing our allocation strategy in this fund. This is a 5-year fund that we have, and this is a pre-IPO fund. Basically, participating in all the companies which are taking exposures into the companies that are, eventually getting listed on the main board. Focused main board companies per app, because the kind of checks that we'll be writing, the liquidity is being offered into the main board. SME may you can enter, you can make the make the valuation upside as well, but through a fund writing higher number of checks, checks as high as 10 to 20 crores into the private funding, वो liquidity drop करना into the listed markets वो काफी challenging हो जाता है. So that is where we transition from our strategy not just to SME to microcaps focused. So our portfolio is focused towards 80-20 ratio. 80% of the exposure हम private markets में लेने वाले हैं, उसमें 80% maybe we have further bifurcated it to 40% buckets, जहाँ पर 40% of the allocation is going to go into the companies where promoter see his company getting listed in next 18 to 36 months. Next डेढ़ से 3 साल में वो company promoter sees the vision, इस company को listed लेकर आएगा. And remaining 40% into the companies where the the IPO is down the line only. 6 to 18 months is the timeline जहाँ पर IPO आता दिख रहा है. And remaining 20% sits where we manage our liquidity and for the follow up rounds में if any of the private fundings we did उसमें still some uh, valuation upside to be captured is pending. We are happy to act as anchors and QIBs in those rounds. So to 20% हमारी allocation वहाँ पर जाती है. So, what are all the sectors that we are we are consciously picking in this particular thing? Already, we are sector agnostic, but we are very selective about the themes, the industries जहाँ पर next 5 years में पैसा बनने वाला है. So those industries that are focused by structural tailwinds like Atmanirbhar Bharat and PLI scheme, under Atmanirbhar Bharat. Uh, Giving them domestic manufacturing a big, boost to that, and all the, all the MSME push that has been given through the government in the last two budgets, 10 crore, 10 10,000 crore worth of funds allocation which will further will be allocating their capital into funds that are investing in companies in this particular segment. So this is the broad structural tailwinds that is happening in the on the macro level, and these are the themes that are going to benefit from them are the most, and that is why we are uh, very consciously picking these themes and these industries through that. One is your advanced manufacturing में defense and aerospace आ जाता है. So the other day we were in discussion with a company where the promoter uh, claims उसने एक radar बना लिया that tracks real time satellite coordinates above the Indian airspace. So right now in the market, the best radar out there that also takes a 2 hour lag to track the exact coordinates above Indian airspace. So this is something that is happening in advanced manufacturing scheme, and particularly in defense aerospace. We are in talks with the company. Let's see how the after the due diligences part that we take somewhere around one and a half month more to evaluate whether this company is solid enough for us to bet upon. So this is one of the example of the themes in the industry that we pick. Then your energy transition, battery energy storage system, we are very bullish on. Then your rare earth metals that has been happening. Then the semiconductors, data center infrastructure. These are all the broad industries that we are betting upon for the value to unfold in next 5 years. So, where do we stand and what we have already executed? So, जो हमारी ये चाणक्य opportunities fund 2 आ रही है, this is the successor fund of a fund that has already delivered phenomenal returns. This fund one we launched in July 23 that came up with a 115 crore worth of commitments, and this is the numbers December 31st that we have already delivered 100%, more than 100% of absolute returns. We started at an NAV of 10, we were sitting at 20, and giving a CAGR of 32.85%. Even in this last 2.5 years, 3 years, if you will consider, only the first year this fund have seen the good market period. The other remaining market period, 1.5 years, has been very challenging, and even in that phase we have been phenomenally delivering this kind of a return in the market, which is giving you a superior alpha here. So the the journey that I'm telling you about, that this fund will be betting on the companies to invest in. So the journey that we have already seen that happening in more than 30 plus companies. So the portfolio companies that we took in the first fund, the first flagship fund, CUF fund that we had, we one of the portfolio companies here represents. So this is a cosmic PV power company. They are into renewable space. What do they do is they manufacture solar PV panels. So we entered into this round in August 24, where we wrote a check. हमने 6 करोड़ रुपए invest करे थे इस company में at a post money valuation of 362 crores. Now the company has already 1 year down the line raised another up round at a 1131 crore worth of valuation. They raised another round of 31 crores. At current market conditions, see, the markets are not that giving at this phase. So at this time as well, the company can easily bag a valuation of 2500 crore. This is going for its IPO in this year, September 26. So this valuation upside that we have seen and are already invested companies, this is huge. This is entering into the profitable companies at a pre-IPO stage and eventually getting it listed. And this again will 2500 crore. This represents the issue price that the company is going to get. If the market improves, there will be a listing premium one. Then eventually, when the company publishes its phenomenal growth. So if you'll see, we entered when we entered at the stage, the company was doing a revenue of 100 crore roughly top line, and eventually at this stage the company is set to declare its top line at 1100 to 1200 crores at this point of time. So the growth has been very phenomenal. Those साल में the company has grown 12 times their top line. So this is the growth of the companies that we bet upon. So this is one company. There's another company where we entered at a valuation of 361 crores, and the company is set to get its IPO this year itself, 2000 crore ki valuation pe. So this number is huge. This delta, this is another company that is living the journey from pre-IPO phase to transitioning into the IPO. And yeah, another company that we entered at 200 crores and eventually is planned to get listed at 700 crores. And these valuation upside, these two three companies that I've been talking about, we have 15 such companies in our portfolio right now that are still valued at cost. So the valuation upside that you're seeing here, 10 k NAV 20 हो गई, 32.85% का CAGR आ गया. This is completely from the listed portion of allocation. So listed portion allocation, CUF1 may we had 50-50. We have almost 50% in PIPO stage and 50% in listed stage. So this represents just half the return right now. So once these companies are going to get their liquidity event and they are going to get listed, that is the time when the return numbers are going to shoot up like anything. And this will be the major driver of the returns for us, and that is why we have enhanced that allocation from 50% in CUF1 to 80% in CUF2 into the private markets. See, what do we do that makes us different in in the market from all the other players that are operating? So, firstly, we offer complete transparency. We have our in-house. We are very very tech savvy. You can access your portfolio. You can access what is the fund doing, उनकी holdings क्या है, our holdings में क्या change हुआ है, what is the price that they entered in and exit in this particular deal. You can track all that on daily basis on our web portal as well as our iOS and Android supported app as well. So we are completely transparent, and the promoters that we have, promoters all have their investments aligned into the fund itself. Fund के साथ साथ wherever the money is going, promoters का पैसा भी जा रहा है उसके साथ साथ. So this makes us something that we are doing differently and from the market. And yeah, the returns outstand us any day. So what is the whole process जहाँ से हम deal filter करते हैं? So how are we able to deliver such phenomenal returns when even the market were not uh, that that coping up with the returns? So we filter down the deals. We pick up the company size of the companies that where we write the highest check, or with co-investors accumulate. We have a say on the table where we can have a discussion with the promoter and tell him this strategy is going wrong. This is something that we are skeptical about. This needs to be pivoted and something like that. So we pick up those companies, उसको हम filter करते हैं. Then we see the company, the sector, the industry the company is operating in. वो उस sector में 5 years down the line, what is the what is the growth scope क्या है? growth scope क्या है, market sizing क्या है, what is the market share that the company can acquire. So in that scenario, what will be the top line and what will be the bottom line given to that, and then that based on that bottom line, conservative we are taking the conservative aspect on that, and वो फिर listed market में जाता है तो उसको क्या valuation मिलेगी. So that is what we track, and we see the upside. We see the upside from the date of investment and date of exit. Then if we are comfortable, then we go ahead. Then the company goes into deep due diligence cycle, where we are having four different diligence department that take on their checks differently. So when everything is done, ये सारी चीजें everything of these things make sense, then the deal goes to the investment committee that we have our investment committee, in-house investment committee. We have advisors who are ex Citi, ex GVFL, ex Geo, ex Reliance. These guys are sitting. These guys have evaluated 1,000+ startups, 1,000+ companies in the private space. They have started their own ventures in the into the Indian markets. So these people know what uh, what represents a good company. At the same time, what is a company that can deliver, make return for the investors as well. So every time it need not be the case the company is good, so that is good for investor as well. No, though at the end of the day we are in the business of making money, so whatever makes more sense as in the aspect of making investment, that is the deal that the investment committee signs off and eventually becomes one of our portfolio companies. So this filter turns down to 2,000+ deals into 30 to 50 kind of portfolio companies that we invest in over the period. सो हमारा इन हाउस डील सोर्सिंग का भी पूरा वर्टिकल अलग है. हाउ डू वी डू आर डील सोर्सिंग इज वी आर नॉट primarily investing into the deals that we get access, the founders that have been knocking 10 other doors. So जो deal ground से first hand we are able to source the deal, that is where we are able to that is why we are able to deliver such kind of returns. How do we source the deals? We take the top down approach. We pick up the themes that I talked about before. We pick up those themes, filter down the industries that we are bullish on. Then in those industries we pick up the filter of the size of the companies that the company is operating in. So picking that particular size, we reach out to the promoters first and giving them, even the education of how the capital markets can help them grow aggressively. And that is where we come in. We say that with us, you are sorted for your private funding, we are sorted your IPO, we are sorted with your post IPO support as well. So that is where the promoter gets very comfortable with us, and we are able to make good returns out of the deal. So what we do differently from the market as well is we design our own in-house. Since we have this much of the negotiation power from the promoter, we are designing our own in-house investor-friendly SHAs, SSAs. So into the purchase agreements in the private markets, उसमें हम क्या लिखते हैं? So what other players do in the market is VCs do in the market is they bet on, let's say they take 10 bets, उन्होंने 10 companies में लगाया, those 10 में से 2 companies are able to deliver them 10x 20x worth of returns, but at the same time few of the companies are going to be written off at zero as well. So how do we do the same play in the private markets, capturing the upside but yet controlling the downside? We control the downside by putting the buyback clause. So what we see is the company is profitable, the promoter is already having deep pockets. So when we are entering into the private market, pre-IPO stage पे हम enter कर रहे हैं. Let's say 1 year down the line, 2 year down the line, the promoter changes its vision. उसे IPO delay करना है, उसे IPO नहीं लाना है. SEBI ने IPO का approval नहीं दिया. या let's say the company didn't perform as it was expected to. So even at that stage, anything can go south. So in the companies that are not well performing, we are protected by that clause wherein we can ask the promoter to buy back our stake in the company from us and give us our capital back. Not just the capital, on top of it, we charge interest as well. Interest varying anywhere from 15 to 24%, depending on how good we negotiated terms with the promoter. So this makes us not just go for the upside, capture the upside equity, mein, but as kind of a debt kind of a structure, we are able to protect our downside as well here. So that makes us different. And Yeah, we not just on the quarterly basis, we do portfolio, tracking on a monthly basis and plan our uh, take exposure in any company. First planning the exit. This company may enter करते हुए exit sorted है. That is where we are, comfortable to go ahead with. So these are all the different DD departments that we have in house. Every DD is given a different kind of a scoring, and at the end of it, the scorecard on the scorecard, एक scoring level surpass होता है. Only that deal is allowed to go through the system wherein the it would be presented in front of the investment committee, and yeah. That is not all. We give it, this is something that we do in parallel to the industry practices. Other than that, we give weightage to the ethical DD as well. So let's say company के financial sorted है, company का legal end sorted है. There's no case underlying on the company. Operational side, the company has a good report. Taxation में भी कोई defaults नहीं है. But at the same time, the company does not have, let's say, the successor planning. The promoter is 55, 60 years old, and he does not have someone else planned to take on his business. We That is a red flag for us. So not just by the book that we check in the due diligence, but we check on the aspect that anything could risk on the growth of the company. कुछ भी वो risk आ सकता है, तो we are considerate of that as well. So the fund managers dedicated to this particular fund is Kresha. She's the promoter and director, having a decade of experience in capital markets, managing the family office money, and she has been a part of Vodafone Idea Treasury, and have been managing the investors, dealing with the investors, investor relation for more than half a decade now. She's a chartered accountant, so as well am I. I'm a chartered accountant as well. Started my career early in sales side investment banking, wherein advised deal advising to the promoters raising capital. Eventually moved to the buy side, handled establishing a family office for a promoter from manufacturing background, and getting a SME category one fund established for him, and making deployments into the startups. So this is the in-house, investment team that we have. Uh, and again, at the same time, telling you this another highlight, the DD team, due diligence team, is different from this particular team. So this team takes the initial check if the deal makes sense for us to enter into or not, and eventually when when we make the investment, they track the companies actively, how the companies have been performing, or what is going right, what is going wrong, and if we need to get upon a call with the promoter to discuss the terms again or pivot something. So this is the that team, and the due diligence team that checks all the checks in the company, that everything that the promoter is claiming is right or not. That is different. We have a 15-member team that placed as well. So this is our leadership team and promoters who help us evaluate in the investment committee whether we the deal makes sense for us or not. So this is a 5-year fund. Where do we stand as of now? Is we are, we just 2 weeks back we started discussions with the, 2 3 weeks back we started discussion with the investors that we are planning this fund, and we have already received worth 35 40 odd crores of commitments, and this is where we plan at the end of April is something that we are planning our first close, and initial drawdown as well, and eventually we'll be taking 20% drawdown upfront. Remaining 80% would be drawn down over a period of next 18 months. By September 27 is what we are tentatively targeting, and yeah, the fund declares its closure at April 2031. So as a we being a AIF registered through trust, we are the most safest investment vehicle to invest in. How come? We have multiple people, multiple authorities taking over us. So as a investment entity, we have to report on a quarterly basis to SEBI. Any compliances check that the SEBI questions us, we have to report to that. SEBI is over our head to do that. We have as our trustee Bitcoin Credentia. They have our we have set quarterly reportings. They need our quarterly reportings as well to, to check if all the operations have been happening right or not. Then we have the custodian, wherein who manages the, custody of the assets, all the cash which as an investor you given us is retained with ICICI Bank. We don't have our, cash in our account. We just issue instructions to ICICI to whether to, put that funds to this investments, and when to take the exit. We issue those instructions. We as a, investment entity, we can't do that. We have given all the custody to ICICI Bank, and we have EY, Ernst and Young, as our, tax and advisory partner. And CAMS, who, gives the reporting, calculates the, all the expenses, all the, returns kind of structure, and calculates all the NAV, and that is being reported through our in-house app that that I, discussed above. Yeah, that is CAMS. That is the, CAMS solve the purpose for us. So this is again, this is a category two fund, 5 year, tenure we have, and this is a fund size is 500 plus 500 crores. Yeah, where the drawdown we'll be planning is 20% upfront, which will be withdrawing tentatively at the end of April, and remaining 80% at, by September 27. So these are broadly the commercials. How we follow is the 2 12 20. 2% is the management fee. 12% is the, performance fee, wherein over 12% hurdle we charge 20% performance sharing. So let's say if we deliver 20% worth of return to you on a annual basis, on a CAGR basis, we'll be charging 2% of the management fee, which is completely separate, and 12% you will be getting above 12%. 8%, 8% is there. 8% ka 80%, 6.4% will be added for you. 12 plus 6.4% is what you will be getting, and over a return of 20%, we will be getting just 1.6%. So the taxation structure remains a pass-through entity. So whatever we as a category two fund, we are acting as a fiduciary agent for you. We are investing on your behalf. You are the returns would be taxed on your book, on your accounts only. We would be just deducting the TDS of 10%. So that would be all for Chanakya opportunities too. That is the whole pitch, and that is the whole idea behind this micro cap, pre-IPO to micro cap growth fund that we have. And any questions or any particular thing you'd like me to throw some light on, I'll be happy to
Thank
do that.
you, Akshayji, for explaining it so well. You can stop sharing your screen and we can have some Q&A now.
Sure.
Yeah, so thanks for explaining and thanks for giving this kind of clarity to our investor community. Just that I would like to understand, rather my investor community would also like to understand why somebody should invest in SME rather than investing into main board.
So this particular question, if you would ask me, see, as an investor, what we look is we look where the value lies in the next coming years, not in the history. So SME has delivered phenomenal returns. It has in the in the past, but if you'll see where does it stand today, like, to tell you about it, I was reading the article yesterday from Money Control as well. Money Control has itself highlighted where does the SME market stands right now. 2 साल पहले तक the IPOs were delivering as high return, average return was 62%. 25 में it delivered a 12.5% return. And let alone not just talk about the first quarter, how the first quarter is going for 26. So at this kind of return, the alpha it had, how well does that going to sustain in next 5 years? We don't see that sustaining, doing that well. One, and at the same time taking such a risk where the liquidity is in question into the listed markets, you taking exposure into the private markets, writing such huge checks, let's say 10 crores, and eventually you see an upside of at least 2 to 5%. Let's say it happened for 2.5 times. 25 crores of an exposure you are having in a company, an SME company that has a market cap of itself 150 crores. How do you see that liquidating into the listed markets and getting returns to you? So unrealized to realized return में जाते हुए you are going to take a major hit in that due to liquidity dry up. So that is where we see in the next half a decade it is the primary micro cap is going to be the main area where value creation is happening.
Perfect. So, what kind of investors should invest in your fund? What do you think about that?
So see, the investors, where the investor is, not that. See, there are two kind of investors that are volatility sensitive and that are not. So if you are volatility sensitive, this fund is particularly for you, where the exposure is 80% of exposure is going to be into the private markets. So private markets में जैसे मैंने आपको दिखाया, the company that we took exposure in August 24, वो अभी भी हमारे पोर्टफोलियो में at cost बैठी है. वैल्यू उसकी क्रिएट हो गई है, बट वी आर नॉट रीवैल्यूइंग इट ऑन द अपसाइड अभी. अगर अपसाइड पे अभी रीवैल्यू दिखा दिया, टैक्स स्टेबिलिटी क्रिएट हो सकती है, कुछ भी हो सकता है, बट व्हेन द कंपनी इज गोइंग टू गेट लिस्टेड, व्हिच वी नो इट इज, सो that time you will directly see the valuation upside. वो वैल्यूएशन अपसाइड डायरेक्टली आपको कैप्चर होगा, एंड दैट गिविंग दिस इज अ कैटेगरी टू फंड एंड हैज द लॉक इन एज वेल. वो वॉलेटिलिटी सेंसिटिव अगर आप हो, तो यू आर बाइंडेड बाय दैट कि ठीक है, ये पैसा 5 साल बाद ही मेरा चर्न चर्न होके रीडिप्लॉय होके फिर ही मिलने वाला है. सो दैट गिव्स यू द ऑल द मोर नॉट सो एक्सेस to churn it, to take it back on the first place, but that gives you the edge to capture the whole cycle. क्योंकि short term liquidity, short term volatility like this, that is happening currently into the market, that gives you certain times the question of whether I should take the funds back or not. But and at the same time, if you act on it, you lose the opportunity of making money on the whole cycle. So this gives you, this particular fund, it gives you the whole the capturing the whole cycle period. And if you talk about, you know I'll give you a data of last 15 years. If you will take 3 years window in 5 3 years window in those period, 1 years has happened where the small cap, micro cap, and the SMEs have underperformed Nifty kind of a index on the index level. And 1 year when that happens, the valuation reset happens. The next year to that, the index performs at least 3x more than Nifty 50 index. So ये data, this is what the stats speak. And over a cycle of 5 years, microcap index has delivered in last 25-year data. Microcap index have delivered 2.5x more return from Nifty. So giving you the edge to capture the whole cycle. And at this particular point of time, when the valuation last 1 year was, you've seen the mid cap, the small caps, the micro caps, they have been underperforming. So at this particular inflection point, ये अगर आप और नॉर्मलाइज 5 साल की साइकिल पे पिक करते हो, तब भी आपको 2.5 से 3x का अपसाइड मिल रहा है. एंड व्हेन आप इस वैल्यूएशन रीसेट पॉइंट ऑफ टाइम पे आ रहे हो, दैट इज गोइंग टू गिव यू मोर देन दैट. So that should be
Perfect.
decent enough reason for an investor to be here.
So, what do you think? What is the risk exactly involved here?
See, the major risk that we have in the pre-IPO market is, again, where the IPO can get delayed, or let's say SEBI didn't give approval. So let's say we all know the story of NSE. It has been struggling to get its IPO in last more than a decade now. So the IPO can get delayed. The company we bet upon, that can change its course. वो operations वैसे execute ना करे, company can go south. उस case में we can get stuck in the due to illiquid asset, investing in an illiquid asset. But what we say is we are protected there as well. हमने अपना बायबैक क्लॉज डाला हुआ हमारे इन्वेस्टी कंपनीज में, जहां पर भी हम हर मंथली कंपनी ट्रैक कर रहे हैं, जहां पर भी हमें लग रहा है कंपनी इज नॉट डूइंग व्हाट इट promised, or some policy shift happened on the macro level which is going to impact directly to the company, we take immediate exit from that. हम वो बायबैक क्लॉज ट्रिगर कर लेते हैं. वी आस्क द प्रमोटर, ही इज प्रॉफिटेबल, राइट, ही इज रनिंग अ प्रॉफिटेबल बिजनेस, ही इज rich enough to pay our capital back, on top of it the interest that we have signed up with. So the major risk that exists in this market is something that we have covered.
Okay.
Yes.
So, what is your usual check size, and how many companies you are going to buy in this portfolio?
So the check size, the fund size remains at 500 crore. The usual check size for from this company into the private markets exposure that we take is going to range anywhere from 10 to 20 crores. Over the 5-year period, we see taking exposure of 30 to 50 private market companies. And yeah, a few of the, for the liquidity management part, participating in the anchors or QIBs would be a little, above than this.
Perfect, perfect.
Yes.
So, as you know, right now the economy is trading sideways. So, what are your opinions about that? If you can throw some lights there as
So
well.
see, valuations happening, due to risk that is being imposed by the Middle East, geopolitical tensions right now. We see today as well, we saw the major fall since the, war began. 3.26% worth of a fall in Nifty 50 alone itself in the broader market. So when situations like these happen, it's not just the listed market that get discounted, the private markets as well, which
Yeah,
draw its you know to begin with the valuation umbrella, to draw its valuation umbrella from the listed market itself. So listed market में discounting आती है तो private market में भी आती है. How do we do is, let's say a company is operating in renewable space, and the private market, the listed markets, roughly the industry market premium, PE, let's say, is going at 25x right now. So since it is a company that is in private space, so we'll be discounting that PE into the private space where we enter. So if at this point of time we are taking exposure in private market, so the valuation discount is going to be replicated here as well. So
yeah,
yeah, this is the perfect time. See, again, the war-like situation is gets your confidence shaky. It is a volatile market, but the bigger question everyone knows the answer to in their core is this a situation that is going to sustain over a period of 5 years? We all know it's not. So
yeah.
this is the
What is the
particular.
time you decide that you want to now ask promoter to buy back? When do you decide that that now the time
So
has come
let's
to
say,
inform?
sure,
Yeah,
yeah, please. So
inform the promoter that the deal is not getting along, and now we decide to we want you to buy back and give us pay out the interest.
okay, so we have already executed the strategy in CF1. So CF1 may we took exposure in private market companies somewhere around 22 to 25 portfolio companies. If we'll talk about over the life, उसमें से one of the company we took an exit like this. And again, our picking and choosing of the company is that good. Even that company was not performing bad at all. The company was doing, overperforming. Since the company was overperforming, the promoter changed its mind. Promoter said, boss, I'm going to wait for two, 3 further years, and eventually after that I'll get my IPO than the initially decided timeline. So our fund life is going to end in first fund life is going to end in July 28. So let's say the IPO gets delayed after that, we need an exit, right? So what is the use of getting an exit 1 year or 2 year after at this point of time, when we know the IPO can get delayed after the fund life? So we decided today itself we will take the interest and the capital back. So either we could redeploy into a more interesting opportunity that is going to give us better returns than the 2% return, the interest that we could have fetched from this opportunity, or we could give that back to the investors as distribution. So we took that in this particular deal we took that up.
Oh, perfect, perfect. I think we are done. I think let me see if anybody has more questions, and then we can see. I think there are some chats which are still pending. Let me see. So, what is the sponsor commitment in this case?
So right now we have 35 crores worth of investors already with us. Out of that, 5 crores is right now as of the sponsors.
Oh, perfect.
Yes.
Okay, I think we are done. Thanks, Akshay, for joining over this call. Thanks, investors, for coming
Glad
on this
glad to be
call.
a part of it.
And we will have more webinars with Akshay ji. And if anybody is interested, they can reach us at Altport funds.com, or they can call us at 8368 586435. Before I close this call, there is a disclaimer that any stock or any company which we have discussed is not for investment purpose. We have given the example so that people anybody does not make it volatile. So Please be very cautious while deploying any money to in any stock after listening to Akshayji and me. And if you want to know about any particular scheme or about any particular stock, you can reach at our team. Our experts will help you to buy or sell a stock or maybe a portfolio. Thank you. Have a lovely day, everyone. Take care. Bye. Thank
Vanshuji,
you.
one thing I think, have we addressed on more these questions that are in the
Yeah,
chat?
yeah. So
Okay.
that's fine.
Okay.
Yeah, I'll
Thank
talk
you.
to you.
Okay. Thank you. Thank you.